is in charge of our futures trading and has a great deal of time in these markets, experience in the markets, and has been trading for 40 years or so. Is that about right, Dennis?
That's about right.
Great. Okay, so Dennis, why don't you just give us a brief rundown of your experiences, and we can get into talking about a lot of the advantages that futures play over the ETFs that I use from time to time to trade them, and certainly you can begin anytime you like.
All right. Well, good day, Charlie. I'm really excited about what I see now. What I'd like to do first is go over the advantages of futures trading, which most people don't know, and then go through the individual markets, which you're really aware of too, which you do well through your options account. Today is the Super Bowl game, and I listen to the experts who pick this team, pick that team, the points and all. And there's so much unknowns because, let's say, unfortunately, one of the quarterbacks gets hurt in the first quarter. That'll change it completely. Now, in futures, as you do so well with the options and stocks, the technical parts show things before the fundamentals come into play. It's sort of like when you go to an internist and he does the blood work. In other words, Charlie, he could see things before the body will show it. Let's say you have high liver enzymes, but you feel real good. And he says, if you don't do something about it, you're going to wind up with jaundice and other things. But Charlie, this is the most excited. I know it may be guys, but it's sincere, that I've been since 1980. And I'll go through the reasons why. But let's go through the advantages of futures. Now, please be aware that Goldman Sachs and JP Morgan and HSBC are the largest futures traders in the world, and they do extremely well with it. What makes futures so unique is the following. Let's just use gold as an example. If a person bought a 100-ounce gold contract here at 18.15 and it went back to the high last August of 2050, the person would wind up making $23,500 if that happened. Because you have all this leverage, you're only putting down about $11,000, $12,000 to control $181,000. Now, what makes the leverage great here is that if a person buys a house, a home, which people do, and they buy a $500,000 house, and they put $100,000 down, they're leveraging the other money, but they have to pay the bank on the mortgage interest. Here, there's no interest, which is a huge benefit. Now, of course, leverage can work against you, so you have to work with stops, which you have to do as you do so well with your option and stock trading. So let's say that you bought it here at 18.15, and you have the potential here to make 23,000 plus. You stop it, let's say, at 17.95. That would be a $2,000 risk versus a 23,000 plus profit, and it could even be more. On top of that, Charlie, the taxes. Do you know that there's about 10 million new people who are at home in their 20s who are now day trading? They're going to be shocked with their tax bill, because you have to have the capital gains for over 1 year, which I don't know, was it 23.5%? And that doesn't include the state. In futures, there's no time period with the holding for the taxes. So on the first 60% what you make, and hopefully you make, that's 60%, you only pay 15% tax, that's 1.5. And on the other 40%, you pay your normal taxes. That's about as low as anything we'll get. with the exception of municipal bonds.
Yeah, and none of these people who are now doing all of this very short-term trading come anywhere near that. I mean, they're paying essentially, none of them are holding it. A lot of these people are making multiple trades every single day, buying and selling, or selling short and then covering. And so basically, they're paying the highest rate that it's even possible for the government to charge them.
Right, including the state. That's so true. And of course, Charlie, most of them, I'm just guessing, they don't understand what a down market's all about. They've been in only an up market, so they'll find out eventually. So then you also have, which is so wonderful, which I don't know any other investment, you have 23 hours of coverage going on the Eastern time when the market closes, the futures market closes, let's say, at 5 p.m. I'm on Mountain Standard Time, but opens up an hour later at 6 p.m. So it's very unlikely that something can happen between 5 and 6 to really hurt your position. Now, you don't have the coverage, though, over the weekend, between Friday late afternoon till Sunday late afternoon. You don't have the coverage. So if you want to be real conservative, what you could do is you come out of your position on Friday and then, re-enter it on Sunday, because that's where there is exposure and something can happen also to your benefit. Now, that's some of the huge advantages. And you hear, Charlie, you hear all the horror shows. They're going to deliver the cattle to your front door. If you don't get out in time, they're going to deliver. That's nonsense. No one ever gets delivery. The brokerage house always helps you. You just get out before. But another, I think, and tell me your opinion, key advantage is if you buy gold at $18.15 and you pay a small commission, and 2 months from now it's still $18.15, you haven't lost anything as you would lose on other investments.
Yeah, because a great deal of the premium that you pay in options, because you have both a strike price and a date of expiration, that excess pricing, the premium that you pay just absolutely dissolves away.
But the way you trade is so beneficial, and I would say I don't really think there's too many smart people in the world, including me. I think you and I are probably more knowledgeable than most people because of all our experience and discipline. So I personally am in 19 different investments. I have, most of it I would have in options and in futures. But you really have to diversify. And if somebody had option stocks where they could go short the down markets and futures, they're really covering a lot of bases. Now, I'm not being theatrical, and I want your opinion. I know we talk all the time about how you feel. They have really dumbed down the public. Let's take silver. Silver last Monday hits a new high since 2009, a 12-year high, goes above $30. And fortunately, I got out. And the reason why I got out is I did more with my belly than my head, because I felt that there was a lot of entities out there who I don't want to mention, who don't want the silver or gold price too high. It scares the public because it means inflation. So they dumbed us down, and silver drops a lot too, starting Monday afternoon when the markets were closed. And Charlie is telling people that the reason for the drop, give me a life, is that the margin was raised from 15,000 to 18,000. Now, would you tell me, and I know your feelings, that if a person could afford $15,000 for a silver contract, couldn't they afford 18?
Oh yeah, of course.
Well, but this is what they do. All right. Now, silver, let's go go through the various markets, which you are so attuned to too, because you do so well with these things, with the options and the stocks. The silver market's about 50% below the price of its all-time high, which was in the low 50s back in 1980. Gold, I think, gold was the greatest bull market I ever saw, because I don't know of any market that for 11 years, from 2002 to 2011, went up every year in a row. Every year. I don't know any other investment ever went up 11 years. I know many investments are higher, but they don't go up every year. And there may be something out there. The silver should do better. Now, if you look at the inflation, and the weak dollar is showing you how inflation will be coming back. The reason why the dollar, now I was horrified, Charlie, on Friday. I mean, I can't believe how much the dollar dropped. Just out of nowhere, it dropped like 66 ticks. And the dollar has been down about 10% against all the major currencies in the world. I mean, like the pound was 120, it's now 137. The Canadian dollar was 66, it's now over 78. Charlie, those are huge moves. Dollars don't move 10% in 1 year. And the reason, in my opinion, and yours too, that the dollar is so weak, and I'll tell you where I think it could eventually go to, is because of our twin deficits. Our federal deficit, which is out of sight. They keep printing and printing and printing. And our trade deficits. But I'll tell you something else, Charlie. I wanted to get your feelings. Do you know another reason why I think the dollar was so weak on Friday? If you wanted to go into Canada, which is like my second country, I like the Canadians, are friendly people, and you were a business person, you have to quarantine for 3 days and spend about $2,000 to get in. Yet our southern border is completely open. We're getting 4,000 people on average crossing the border, and the border guards could do nothing because this administration changed the regulations with Salvador and Guatemala. They're coming into our country without a border. No other country allows that. Some of them can't even read their own language. They're bringing in all sorts of diseases, including the virus. And this administration now, if you have the virus, is going to put you into a top hotel and keep you there and then release you. That is very negative to a country.
Yeah, but that's, I want to get away from the politics of it, because I think that the much more important issue with the dollar and with interest rates, as you've already pointed out, is the dramatic increase in the deficit. I'm not as concerned about the trade deficit because we really aren't as much of a manufacturing country as we were 50 years ago or 20 years ago. We are more of a service and technology. But the fact that the deficits based on spending have started to move, not in an arithmetic way, but in an exponential way. We're talking about now another 1.9 trillion for this current COVID relief package that the president is pushing here. And I'm actually pretty sure that it's going to pass. It actually has to pass because they control the Senate. But the fact of the matter is that I have always thought, and I know that we share this as a thought about the currency, and I'm not only speaking about the dollar, I'm speaking about every currency in the world. The currencies are the best report card, not the Dow Jones, not the NASDAQ, but the currencies are much more of the report card of makes it the most honest market that there is. I know that you have, I don't remember the number, but I know you have it on the tip of your tongue of how big the currency markets actually are compared to stocks or even futures.
Yeah, it's $4 trillion a day, and it trades around the clock. If you in the currency markets, Charlie, and that's so true what you said. I mean, you're so knowledgeable in so many areas. Even though you're really a stock guy, I'm impressed. The currency market trades around the clock. The $4 trillion. You know what trillion is? Carl Sagan looked up at the sky and said there's a trillion stars out there. But we can't tell them there's a trillion. No one could relate to a trillion. I can. He said, so we'll tell them there's a billion. But the currency market trades more in 2 days than the stock market does all year. After the currency market comes the bond market. Now, when we look at the dollar here, I think that over the next year or two, we could see 80 on the dollar and eventually 70. If it went to 80, that's about a $10,000 profit on a futures contract. And you could use $1,000 stop at 10 to 1 risk reward. It's reflecting things, but without being theatrical, governments usually do the wrong things. And Milton Friedman had found out. I mean, he went from a crazy liberal to someone knowing that you can't keep printing money. He was that smart. If you give a drug addict like we are, I mean, the way the government is running this currency, they should be bankrupt. And by the way, Charlie, that's true of almost all countries. Every country has joined this bandwagon right now. We probably are the worst. But if you give a drug addict some cocaine, I don't know what drugs are all about. You get a buzz, you get a high. But to get the same buzz, you got to give them more of the cocaine or heroin to get the same high. And then more. But Charlie, it's never different. If you keep doing it and you don't hold back, the patient is going to die. You're going to have a drug overdose, which is so unfortunate. Now, ever since Adam and Eve, anytime a country goes into this type of deficits and prints this extraordinary amount of money, the currency can't last. Now, you may disagree with me, but Standard & Poor's and Moody's, we are not a AAA currency. In my opinion, and you may think I'm biased, we're probably a CCC. And people don't realize, as you brought out, that there's other problems all over the world. Like I was talking to a client yesterday. She says, but all the countries have problems, which is true. But currencies trade against one another. And we are probably the weakest currency in the Western world. We know that Britain had problems with the virus and terrorist things and leaving Brexit, yet the pound is up so much against us. Europe has problems. They're a socialistic country. They have terrorist problems. They're printing money too. But nobody is as weak as we are. So I think that we're probably, and I hope I'm wrong, but the good thing, Charlie, is that time tells all. When you make prognostications, you got to hold yourself responsible. I think that the dollar is due. It is not going to be a reserve currency somewhere in my lifetime because most of the countries hate us, which they shouldn't, because we're the most benevolent country in the world. We're a great country. I'm happy. I'm an American and I live here. But it won't be. There'll be eventually another type of currency. And China, which by the way lies about all their numbers, they have a shadow banking system. They're getting huge amounts of deficits. Their virus is now coming back. The consumer there, Charlie, is not spending like they did before. There is much more unemployment than they tell you. The Chinese currency is roaring against our currency, and it makes no sense. But it does make sense. Okay, so that's what we think with the dollar now. The lower dollar causes inflation, and it tells you the health of a country. All right, so we spoke about gold. And you know what's interesting about gold? And I'm not a gold bug. done extremely well. I had a phone call on Friday from one of my clients who's now in hospice, Charlie. He's 91 years old, great guy. He was a nun and a priest. His wife was a priest and nun. And when we were living in Italy, they came to visit us. We went to Assisi. And I told the son, you know, your father has in his vault gold coins. He had put in $10,000 into gold coins in 2002. And now, Charlie, it's worth $70,000. Those same gold coins. Now,
Dennis, the one thing that I really want people to understand, and we've been on this for a little while, but I think that it's always been my attitude that there are a couple of reasons why people get blown out of the market, why they lose money in options, why they lose money in stocks. Of course, you know, most of the younger people have never seen a down market, so they have no clue about, you know, how this goes in the opposite direction. But more importantly, I think that people need to understand that inflation is here. It has been here for quite a while, and anybody who goes to a grocery store knows that. They're getting a little sneakier about it. You know, Oscar Mayer, all of a sudden you're buying a package of bacon, except that it's not a pound anymore, it's only 12 ounces. So, you know, they may have seemingly lowered the price, but in point of fact, they have not. But more important than that is that people need to be diversified. And along with diversification, they also have to be really aware of what appropriate position sizes are for them to trade. You know, the guy who got a $1,500 or a $400 a week PUA check from the government might have said, oh, geez, you know, I really like this stock XYZ. I have $2,000. I'll just buy $2,000 worth of calls. Well, that's inappropriate. I mean, can it work? Absolutely, it can work. Will it over time? It absolutely will not. And so I think that it's probably more important for people to understand that they have these other options aside from stocks, aside from options. You know, Peter Lynch, who was the founder of the biggest fidelity mutual fund, had an attitude and portrayed it as buy what you know. And frankly, while that works in stocks, it also works in commodities. I mean, what do people know more than the price of beef or the price of milk or what a pound of sugar costs? And so these are all things that are available for trading in the futures markets. And so if you want to really play the Peter Lynch card, which has worked remarkably well for the last 40 years, and grew that Fidelity fund to the biggest fund in the world, then this is definitely an alternative. And so I think that as you allocate money, you know, you need a certain amount of cash, you need a certain amount of gold or silver to hedge against inflation. You need stocks that pay reasonable dividends so that you have income coming in. And of course, there's room for speculation, which is actually where I put the options. But I don't think that you can get a more astute look at what is going on in the world than through the futures markets.
Yeah, well, that's so true. You see, pandemic and with these deficits around the world and negative interest rates, in normal times you should be able to do well in almost any investment. Bonds, real estate, stock markets, options, futures. But this kind of time that I see coming, and I have a pretty good track record with this, I think it's going to be abnormal times. So when you look how strong the grains have been, and then you look even at the breakfast foods, cocoa, coffee, sugar, orange juice, all of them are lifting their head. And this inflation that we now have, it's much higher than they're telling you, because they exclude food and energy. And crude is what, I don't know, on a 1 year high here. The future should be maybe one of the best places in town to be in. Now, if we have this, which we do have, silver normally outperforms gold in inflation, and silver now has, Charlie, the solar energy usage. Which
it has more than that, Dennis. Between the use of silver and the use of copper, we are talking, as people talk about electric vehicles, forgetting autonomous, let's just go with electric vehicles, because they are becoming such a big issue. An electric vehicle uses 8 to 10 times the amount of silver and copper in order for that to run, in order for that to be an alternative. And so what you have there, and copper has acted really well in this market. What you have there are industrial usages besides the traditional inflation hedge usages. I mean, even gold, has a lot of use in the computer that sits on your desk. And so, all of those things. And frankly, the metals especially is a good area, because the other thing that gets a lot of use is platinum.
Yeah, I want to go through that, Charlie.
Platinum is and palladium are both two of the major building blocks for your catalytic converters in gas engines.
Yeah, I want to go through platinum because I like all the metals now. On my work, the silver, copper, platinum, and palladium gave me buy signals on Friday. Gold hasn't yet, but it should probably follow. Now, I like platinum on a risk-reward basis the best for the following reasons. When gold was 1,900 years back, platinum was 2,500. It was a $600 premium. Right now, it's at about $600 discount. But platinum is so rare that if you take all the gold in the world above ground, you could only fill up a barn. But if you take all the platinum in the world above ground, and it basically only comes out of South Africa and Russia, and both of them are unstable with us, you could only fill up a clothes closet. Now, platinum fell apart, I think, because in 2015, we had the Volkswagen scandal, as you know, with their car and the catalytic converter. So I think that of all the metals, I like them all. I think platinum may take a premium again to gold. I know I own platinum, and I know you've done so well. You have recommended some platinum stocks to your clients. Charlie, I'm not a stock trader, but I bought some Freeport Max last week, because I saw the copper prices doing well. So I like all the metals. I think they'll all do well if we have this inflation. But I think platinum may do that. I think platinum will take a premium to palladium. And palladium is more than double the price of platinum. But let's look at all the markets. I mean, all of them. The grains are exploding. The dollar is
spudging. I want to mention something about the grains too, Dennis, because I saw an article in the last couple of days that all of that Chinese buying that was going to come into the grains, only about 55% of what they agreed to has come into the market as buying. And so there's something else going on there other than what was supposed to have been, the deal of a century from our last president with what China was going to do for us. And so, clearly, as we get back to talking about inflation, and let's remember one other thing about the Fed. The Fed is significantly wrong in all of its in all of its ideas of where and projections of where prices should be.
Well, that's so true.
I don't know how they figure it, but I can tell you now, as somebody who shops for food, there is well more than 2% inflation.
Well, Charlie, that's so true. They're economists, and in economists, they say on one hand this will happen, on the other hand this will happen. They need three hands, but they're almost always wrong.
Yeah.
Who was the head of the ECB, Charlie, before Draghi? The French guy, Trichet. Do you know that he raised interest rates at the very worst time?
Of course.
That's before all the economies around the world started to head south.
Yeah.
So we know how they're economists. Economists don't do well. The only economist I liked a lot was Milton Friedman. But I want to make a prognostication now. I want to go on record, and I could be wrong. I've been wrong before. But I think it's very interesting, and it tells me, and should tell you guys, no guarantee, what I see happening. Right now, the gold market, compared to the Dow Jones is 17 and a half times the price of gold. Let's say take gold at 800 and the Dow Jones at 31. 18. It's 17 and a half times higher. Charlie, I know it's going to sound almost off the wall, but I sometimes do well. The gold market in 1980 was at 850, and the Dow Jones was at 850. It was 1-to-1. I am now going on record because you have a lot of followers, which you deserve, and they're very loyal to you, and they speak so highly of you. I'm predicting, and we'll see, because time will tell, that the next year or two, the gold market compared the Dow Jones will only be 8 times the size of gold. That's half of what it is now. Now, if that was happening, maybe gold would be 2,500, and the Dow will be at 1,800, at 18,000 rather. Could it ever go back to 1-to-1? Anything is possible. It sounds almost unbelievable, but it could happen. Again, as you and I discussed this week, look at General Electric. Stock was the largest company. It was $65, and now it's about 11 or 12 for all the reasons that we discussed.
And so was General Motors, which had to go bankrupt in order.
Yeah, but Charlie, you're so right with this. This 1.9 trillion deficit, rather payout, is ridiculous. I mean, you should help out the people who have lost jobs, as we both agree, work in the restaurants. But you don't help out the airlines. They deserve this.
No, and that's something that I have written about and I rail about on a regular basis. The airlines never produced profits until they started hitting us with all of these fees. And what they did was they were one of the biggest buyers of their own stock, which did nothing economically for them, instead of putting away for a rainy day. And believe me, airlines should be the poster child for when there are rainy days. And now they're talking about, this past week, both Delta and American Airlines put out notices. The unions there, their agreement is that if they're going to do layoffs, that they do give notice 60 days prior. Well, the government money runs out the end of next month, and so at 60 days prior, they have put out all of these notices that they're going to lay off 13,000 here, 15,000 there, and the fact of the matter is, they shouldn't have the money. I mean, it's okay to try and help them, but these are companies that have not pared back to meet what the actual demand is. They're bloated. They didn't use any of their money in any way that would help them capitalize themselves the way that the banks did. I mean, the banks, you can argue one way or the other about the banks, but by virtue of what the rules became, the banks have 2 or 3 times the amount of equity in them that they did 10 years ago. The airlines, absolutely not. These are bloated companies. They ought to be downsized because there is no point, none whatsoever, in helping them to remain bloated and undercapitalized going forward. Okay, Dennis.
I agree. I want to close, Charlie, with just the following, and I rest my case. And it may sound very biased and partial. You up there in Boston would not take $1 million and buy a building that would only give you a 1% return. You would say, it doesn't look to me like a good investment. I think you feel that way. What makes the stock market go up and down over the medium term, the long term we're all dead, not the short term, is the price earnings ratio, the PE. And right now, we're presently at over 30. I don't see the stock market doing well, but I just want to tell you one thing, and I want to rest my case. When I was 27 and I had a seat on one of the regional exchanges, and most of the people around me were 50 and 60, when I was 27, there was hardly anyone on Wall Street at that age. There was a fellow there named Hank Meister, born-again Christian. He's probably in heaven now. He saw a twinkle in my eye, and he never called me by my first name. He said, "Marlow, come over here every day. Come over here, Marlow." And I'll never forget this, Charlie. And believe me, it will come to bear. He would look up at the ceiling and say, in Wall Street, they could do the impossible. They can make an elephant walk on top of the ceiling, which is impossible. But when the elephant falls off the ceiling, as it's going to at some point, you don't want to be below it. Now, in closing, Baron Rothschild was the richest man in the world in the 1800s. He was the French banker. They once said to him, "Baron, how did you make all this money? Why are you so smart?" He said, "I'm not smart." He said, "I was lucky. I always sold early." Now, Charlie, your wonderful clients or potential clients should give you a call and spend a few minutes with you, maybe 20 minutes, and you could show them the good, bad, and ugly about why they need to be in futures besides the other things that they have with you. And, we want to help people out, and I want to thank you for giving me this opportunity to speak today. And we'll see what happens, okay? Let's try to do this. I would like to, with your permission, we don't have to go through all of this, but every week maybe we could tell them what we expect in stocks and futures for the following week.
I think that that's a good idea, and I think that we can highlight individual futures from time to time. Had I thought about doing that, I certainly would have thought about the natural gas right now.
Yes.
It's coming down now. It's snowing like there's no tomorrow. Right. And frankly, there has been some really dramatic.
Charlie, why can't natural gas? Right. Why can't natural gas go to 1? Why can't natural gas go to 6?
Oh, it can. Not only that,
that's 30,000 a country.
It's already 6, just not here. It's when you're talking about foreign countries, who are purchasing it, the price is dramatically higher out of here, which is one of the reasons why I'm so big on that little stock Tellurian, TELL, because it's being built to export gas the same way that the same man, Sharif Suki, built Cheniere Energy. We're talking about something that was $3 that has been $90 and is currently in the 60s, and this guy is building the same thing now. And the point is that it's an export product. The fact that we produce it here as a byproduct of gas drilling, of oil drilling, sets us up to really be a powerhouse going forward. And so, maybe the next time we can talk a little bit more about nat gas, or, for example, lumber at new all-time highs, over $900 per board feet, 1,000 board feet, which is also a futures market. People need to understand that the one thing about futures that neither of us has mentioned up until now is they don't go to zero. There's always a price for something that has a use, whereas a company that exists, no matter how long it exists. Look at Eastman Kodak. You had a company that was one of the biggest and one of the 50-50 back in the 60s and 70s that basically went out of business. They're doing something now, but the thing with futures is they don't disappear. There will always be a use for most of these things.
And that's so true. And I would think the majority of people who trade themselves, because you don't do your own root canal surgery, lose money. So the advisors who are seasoned, who have been out there for a long time, they do extremely well. Let's say 30% of the people make money, and I don't know what the exact number is instead of 70, but Charlie, you are such a good technician. I'm not giving you accolades, I'm being genuine. You did something last week that really impressed me, and it was almost proprietary, and you shared it. I think you did something with the natural gas with a 5-6 day cycle, and you showed it going up and going down. I commend you for that, because you're a stock guy. You're not a futures guy like me. So I do want to acknowledge and commend you on that great work, all right?
All right. And we'll be back again maybe next week, and if not, certainly the week after. And also, Dennis can be heard on my radio show on Tuesday mornings, and I will put out in my daily note on Monday nights the times when he will be on and how to listen. So thanks for your time, Dennis. I really appreciate it. I hope that all of the listeners will understand what a leg up this is, because frankly, there's not a lot of information out there about futures unless you're talking about people trading Bitcoin. So thanks for your time, and we'll be back again.
You're so welcome, Charlie. Keep up the good work. All right?